Hello and welcome back to YouTube. My name is Justin, and today we're talking about this shirtless man. His name is Vladimir Putin, and he is calm, cool, and collected. What we're hearing is that um, Russia's southern military district says its forces start returning to base from Crimea. And the same thing happened at the southern border, which means that they are starting to dial back some of the rhetoric. One more thing here, just so we're aware of it. Russian lawmakers vote in favor of sending resolution on recognition of two breakaway regions in eastern Ukraine to President Putin. What does this mean? It is not done yet. But what it means is that we're doing a push-pull where the Dow futures jump more than 300 points as Russia pulls back some of its troops from the Ukraine border. We can go through this article here, but the title pretty much summarizes my thoughts. We can also look over here and see some of the commodities and things that are affected by these headlines, including gold and wheat drop, nickel flat as Russia says pullback begins. I don't think it's going to end. I still think that we're doing the push-pull. And what I would just note is that I am noticing that the rhetoric is starting to dial back a little bit, but I think that the fact they're asking for sovereignty from some of their locations tells me that this thing's not over. And what it feels very similar to me is the same thing that we saw that happened during the U.S. China trade talks, where we get a headline, we move big time. We get a different headline, we reverse the whole move. We get a different headline, we chop up. So what I would highly suggest is what I typed up yesterday in Slack, basically saying that we need to be mindful that if we don't like trading in this type of environment, we have to step back and stop trading, or trade less, trade smaller, and have higher conviction. Why? We don't know when the stuff's going to end. We have no idea. The last thing I'll say here on this one section here is that yesterday I actually wanted to go long. If you've been watching this channel for the last little bit, I wanted to go long and swing trade my long yesterday. Looking at the futures market today, we're up by 1% here in pre-market. Took a little bit of a leg down after we saw the PPI or producer price index numbers coming in about 1% or 9.7% year over year. But what it basically means is that even I got chopped up hard yesterday. I was ready to swing long, would have woken up really happy today, but headline crossed as a joke from the Ukrainian guy. Oh yeah, we know what day they come. And the market just went completely down. So I personally think that as of right now, as we're shifting gears here to looking at the market, I personally believe that we have now established a fear bottom. And again, if you guys are watching the stream, I would appreciate a thumbs up. You can drop me a comment. We didn't really have any hearted comments yesterday, so we're going to skip the comment giveaway. But going forward, if you guys do want to comment, we will do that. And if you have a question, again, pop it into Slack. More than happy to address it at the end of the show. What I would note here are some notes that I put in Slack, basically saying that I think we hit peak hype fear yesterday, and we set levels of support on that peak. What does that mean? The low from yesterday is going to be the low of the week. And if we hold that, it pretty much tells me that we now have a clear area for the bulls to defend. The net effect from James Bullard talking yesterday was meh. Why? There was nothing new that he mentioned, and the market repriced fairly fast. Now, as we look over to what happened with Russia and Ukraine, the market snapped back. So for as much red as we got yesterday, we got it all back and more. We fully engulfed the candle. We're right at the 200 DMA. So what does that tell you? Well, what it should tell you is that the market is no longer moving down on negativity. So like with any other stock, index being the same, if bad news can't take us down, what can good news do? Make us go up. It can make us go up. So we're going up right now. We're battling for that 200 DMA. I don't know where we're going to settle, but what it tells us is that we now have floors established. And if these bulls can at least hold the line, right? Hold the door, hold the line. They can just do that. That is likely going to be good enough for us to attempt to move back higher. And as I look here at the pattern, perfect bounce off the lower trend we were looking at yesterday. Made it all the way back up here to roughly 4,500. All we have to do today is see how we're going to react to this 200 DMA. We will be opening up with a sizable gap on SPY of about 1%, opening up on the 200, which will act as a pivot. And then QQQ was up 2%, faded down a little bit, down to about 353, also leaving a gap on the chart. So again, as we're looking at this megaphone, ask yourself too, where do we usually bounce? Off of trends. What is this right here? It's a trend. So putting it simply, looking at ES and NQ, I think we just got a battle for the 200 DMA. And then the white line right here, which is 44.26, is going to be our most important area, our previous top. And just going sideways for a day or two would be fine. The risk holding long overnight or from here is that you have literally no idea what kind of news you're going to wake up to. You were like, oh my God, I'm short. Yes, I'm short overnight. You wake up, you're like, oh my God, what happened? And then the PPI numbers come in and you're like, oh, well, down a little bit. Again, it feels almost exactly like what we were getting during the US China trade talk. And I don't know about you, I did not particularly like trading through that time. So if you don't understand what's happening, or if you're not in tune with what certain headlines should mean to the market, sit on the sidelines and do nothing. Looking at NQ over here, let me actually pop over to here, just get this open so I can look at the charts. Looking over here, I have not adjusted these lines since last week, but what I'm noticing here is that, again, we had an uptrend that we drew, we bounced off of it. We're almost at a very, very, very important area here. You can see that in pre-market, we're testing the lows here back from roughly October. We can get through those ones. We're looking for a test over here. And in terms of where here is, it's roughly 14,600. We can clear 14,700, probably looking for roughly 15K test and potentially get us up to the 200 DMA. That's it. To make it really simple, we're going to look at the weekly charts here. Weekly chart for SPY, we can see that we were going up for a very long time. We stopped going up, and now we're going down. This is a weekly chart. So what does it mean? Well, this takes 5 days of trading into account. For us to reclaim victory or break back bullish, all we got to do is rally up another 10 points to 454, break that area, reclaim the uptrend, take out the head and shoulders neckline. It's that simple. The telltale sign for me was just the reaction that we got yesterday. We not got a nice snapback, but what I would note, just looking at a shorter time frame, is that it literally took us like 3 15-minute bars. We wiped out, I don't know, like 6 points, and it took us almost 2 hours to grind back up to reclaim 5. So what that tells me is that, again, at the index level, we took the elevator down and the staircase up. If you're not familiar with what that means, it means that it's rocky roads right now. The 50 weekly is what I talked about on the weekend video about being strong support. We've now penetrated it and we held it on the close, which means that there was pressure bullish building up overnight, or bears who were closing out their positions. Now, as we have a look here at QQQ, similar downtrend on the weekly chart here, we can note that we hit the levels almost perfectly, 343, 350. And those areas just come from basically our previous tops going back to April to June of 2021, sorry. And then our relative low. So previous tops were support, previous lows were resistance. We're going to be opening up above 350. So that's bullish. At a high level, that's pretty much it. Mason, do you want to come on and give your section here, please?
Yeah, how's it going, Justin? How's it going, everybody? Good morning.
Good morning.
We'll just continue with our NQ series that we've been kind of doing. Yeah, so as we talked about with the Slack group last week in our private streams, the potential to test this low pocket of previous consolidation has been tested. We got the Bullard Slam yesterday, as you guys all know. You're probably paying attention. And the bounce and overnight futures. Honestly, playing out pretty much as I was expecting. I didn't expect this strong of a move overnight, but it's super constructive, and we're actually basing above the Russian headline slam right here. They cut us right through support. Now we're basing back above it. Resistance turned into support so far. The only level I've added on this chart is this one right here at 14,365. If we do lose roughly 14,500, I'm expecting the pullback to that range to find some support. So don't be too shocked there. But other than that, we're still really not in the clear until we are above the 200 daily moving average, like Justin mentioned, for longer term traders, which is roughly 1,500 up in this higher end area. So until we're trading up in that range, we're not really out of the woods, but it is very constructive and we're progressing nicely, I would say. Nice to see Putin chill out a bit. Numbers are barely visible. Yeah, I have a high resolution. That's probably why. That's why I try and say the numbers. Main numbers today, Roland, or Green Machine, sorry, not Roland. 14,151, 14,272, and 14,230 for support. Resistances, you're looking at 14,615, we'll call it, and 14,751, or 14,751 is what I would call resistance for now. Longer term swings is a 4-hour time frame of the NASDAQ, but yeah, that's what I'd be watching for today. Hopefully that helps you out.
Yeah. And since that's the only question, I think what we'll do is we'll just flip back to here. And I have a question
Mm-hmm.
for you, Mason. So, is the
Mm-hmm.
shirtless man impacting your life? Do you listen to the
Um,
headlines now? Do you
my
care?
shorter term emotions when watching my positions, definitely it's frustrating. It's never fun sitting through consolidation phases in the market. And this adds extra pressure. We've already been hurt, and we don't need any more pain, at least in growth land. Um,
Mhm.
yeah. So you can chill out for a bit and enjoy that sunshine for all I
And
care.
to summarize like what I said, like basically earlier, this is the easiest way to summarize it. If in doubt, hop out.
Mm-hmm.
Right, hop the f out. That's what I said last night. If you don't
Yeah.
understand the price action, do not try to be a hero. Try to understand what's happening. Why? Well, again, we are in a bearish pattern on the weekly chart, and we've not invalidated the pattern. So what do we have right now? We have relief. That is it. It's relief. It is not a
Mm-hmm.
reversal. It's not even a reversal attempt. It's just relief. That's what you need to realize.
Mm-hmm.
However, what I mentioned last night is that the bulls seem quite resilient. When I did the weekend review about 2 weeks ago, I talked about us going down to 420s or to 438. All we managed to do was go to 438 today on new bad headlines. So what does that mean? There's someone out there who is willing to buy at a higher price than they need to, and I frankly don't really understand why.
Mm-hmm.
So if I don't understand the reasons why, what does that mean? Well, I should probably be on the sidelines. So what's your take on why we're so resilient right now? And then I have two more things I want to pull up really fast. We can look at those. What do you think about these
Um,
bulls, though?
I honestly am not sure why we're so resilient, but what I think is I think a lot of the Fed inflation headlines have been honestly, for the most part, I don't want to say priced in because I don't know for certain if they have or not. But yeah, that's kind of what I'm getting at is that they've been the decline we've seen in growth. A lot of those stocks are down 80%. Some of them. And you posted something in Slack this morning saying retail. It was on
This
retail
one, that's what I
trading.
want to pull up. Yeah.
Yeah, yeah. So that was interesting. The tech, everybody leaving the tech sector, which is why I think it's kind of priced in, right? It's quite
So
drastic.
this one here says, like, I'll just read them really fast.
Hmm.
BofA Feb Investor Survey, biggest underweight position on tech since August of 2006. What happened from August 2006 to 2008? Big booms, right? Market went up big
Hmm.
time. BofA survey, cash levels jumped to 5.3%, highest level since May of 2020.
Right.
Looking at the second one here, BofA, only 30% of investors expect an equity bear market in 2022, me being one of them. But right now, again, strong opinions loosely held. I'm getting
Hmm.
feedback that we've not invalidated the pattern yet, but I'm not short at all right now. I'm in fully in cash. 41% of investors expect flatter yield curve, highest since 2005. So that's pretty much it. Russia Ukraine tensions is the fifth biggest tail risk for markets. The fifth. Hawkish central banks remain top risk, and we've now baked in 7 hikes. What does that mean? I think we've hit peak hawkishness, and now they can slowly dial it back. Just as a final reminder, we do have 5 Fed chair nominations who are getting renominated to the Fed today, including Jerome Powell for a second term. If you've enjoyed the stream, thank you very much. And if not, we'll hop back on Slack and see you guys there. Please smash a thumbs up, drop us a comment, and we will see you tomorrow. Thank you very
Thanks,
much. Thank you,
guys.
Mason.
Thanks, Jay.